In the next few minutes, I'm taking you on this journey through every important chart of MATIC versus dollar to see what happened, what is happening, and what could be possible scenarios for the future. Let's dive into the polygon. Thank you for still being here, it is appreciated. This is daily chart of MATIC versus dollar. I hope you will stay tuned, because we're gonna zoom out into the bigger charts, weekly, monthly, and find out short-term and long-term plays that could be in for MATIC. For now, let's talk about this daily chart and what is happening at this moment. You see, this is looking pretty bearish, and here, approximately 2 days ago, we said the same thing, and before this big blue candle that you're seeing on the screen, because the price looked weak if you haven't checked out that video, but the pattern is not looking so bullish if we take into account just the bear price action. I'm talking about those engulfing candles. This one is engulfing this one this one is engulfing this one, and today's candle is again engulfing this one, so it's not looking that bullish. Our continuation is the game. Then the game is to the downside, I'm afraid. We already dived in the previous video on why and how, and in the short term we've got to break this trend line that is going to the downside. Here we established the peak, and our first touch point was on 13th of September, so 1 week ago. We were heavily rejected again. At some point, yes, we will meet again. Will it be here in a week, in a month? Still we don't know. You must remain bearish. And this horizontal line of 76 cents is something we talked about in the previous video, but you can see why I'm thinking that this is the most important lever that unfortunately we are now breaking to the downside. In this video from 2 days ago, we have been above it, and I said if we lose it, it could get ugly. It was support here, here, and here. Now we are below it and is making us a resistance, so we must respect that fact. This is one more proof why unfortunately we gotta expect more downside pressure. As long as we are below the 76 cents, it's not looking bullish. And I will again talk about this kind of flaggish move that is playing out exactly as it should. This is looking like a bear flag because we were going down, consolidating inside of this channel, which was a bear flag, broke it, and is now just fulfilling the destiny to the downside. So one more play of bearish narrative. Now if we drew that Fibonacci from that point of 13th of July and taking into account that peak of $1, we are getting those Fibonacci levels. Now we broke 38.2. That level is now a resistance. We're talking about 80 cents, as you can see. But I talked about this in the previous video. $74 is now our reality and we should hold it. If we don't, then we are fulfilling, as expected, 61.8% retracement at 68 cents. All in all, I think that 61.8% retracement at around 68 cents is for now a reality. I don't think that it level of 50% will be a strong support. Maybe it will, but for now, stay on the cautious side and expect that 68 cents. After we fulfill 61.8, maybe this is the retracement we're waiting for. Maybe we will do this, move some time, make a double bottom, and then correct this move to the upside one more time. Frankly, for now, all of that is just a chit chat. At the moment, you should remain bearish because also this 21 moving average is telling you exactly that. Stay bearish because nothing good is happening. Good things happened. Here in July, we found this 21 moving average as a support. Even here, we were still holding the price. Now let's not forget this price action when we started all of this majestic move. Now, as you can see, that is not the case. Here we broke it, we tried to play some games, but unfortunately fell below it, and are now making it as a resistance. Currently, 21 MA is standing at 84 cents at the making of this video, and it will be a fair resistance when we go to the upside one more time. So, a big move to the higher levels of 84 could still be a bearish play. And I assure you, as long as we don't show some bigger volume that we are seeing here, that will be the case. We need to have higher volume, at least like this occasion. This is not enough for a new uptrend, for a new bull, not even a market. A trend, a phase, a rally in a bear market. People need to step in, and in the short term, Polygon will show strength. And now let's travel to the weekly chart. Something big might be happening when we zoom out. Weekly chart of MATIC versus dollar. We zoomed out, and yes, we might be getting some answer that we didn't see or have foreseen on the daily chart. Now, just for reference, on the daily chart we talked only about this price action, and look how tiny and insignificant it looks on the weekly chart. Every candle on this is a week, and look at this trend line, it's giving us much needed answers. Which one? Well, since the peak of almost $3, we made another touch point on the 4th of April, and here something big happened. We broke the trend line of death. We are now above it. No matter how you want to discuss this, this is something good. We broke the trend line on the downside. That could mean that we are entering the phase of consolidation, if not recovery. Now yes, there is still some weakness and we are bouncing and the support on this trend line. It's a proven fact that we could see something like this one more time, bounce off that trend line and then continue to the upside. But at least you can see some progress on this zoomed out chart. And here comes the answer why we saw that bigger volume here. You can see why. We broke the downtrend, and here that fuel was needed as it's shown on the volume. Can you see this flutter of bigger volume that Polygon needed to break this trend line? It is a significant progression, although it doesn't seem at this moment. But some things are happening, at least contrary to the daily chart. Yes, we are again finding the lack of volume, and it should be bigger if we don't want to bounce and keep bouncing on this trend line. But at least we broke the first downtrend of the downside depth. Now what is interesting, you are finding now that I've drawn this 21 weekly moving average, just as like the daily. But ladies and gentlemen, we are above it. It's not looking that great. Yes, we are clinging onto it, we are knocking on it. It could be broken to the downside. It doesn't look very healthy, but at least, as I said, we are making some signs of life. Maybe we'll bounce from here. It is a possibility, but still, it's not looking super healthy. Just like on that trend line, we are knocking on the 21 weekly moving average doors. Let's keep this moving average as a support at 73 cents. And if you see a break below 73 cents at Polygon, that is not a very good sign. Then this story of recovery, it was just a fake out story. Fake news, okay? Oh, I'm not done with you, not even close. You can see when we combine this high of around $2.95 and this low that we made in June of 32 cents, we are getting those retracement zones. What are you seeing? Are you seeing that the biggest resistance for now is 50% retracement at around 97 cents? Do you see that right now, right as we speak on the weekly chart, which is no joke, we are standing right at 38.2% retracement at 74 cents. This is significant stuff that we're seeing now on the screen. We need to hold 74 for the several reasons that I just mentioned in this video. Now this analysis is getting us a pretty simple picture. If you can make a conclusion that if 74 cents break, we're getting into a new bear trend that could giving us some trouble. It's getting clearer and clearer. According to this Fibonacci retracement tool, the next level that is standing at 23.6% is at 54 cents. So it is our next target if we break 74. That is, if we don't show no volume, interest in people for Polygon. But what about the final big picture? I'm glad you asked, because we are diving into the monthly chart right now. Monthly chart. Beautiful stuff. Everything from the exception of polygon in one place. So the data all the way from the April 2019. This move, it really looks majestic, right? If you invested in polygon around this time, you were a very happy man, I suppose. Now listen, let's talk the real stuff. And you know what? Monthly chart doesn't look that bad. First thing first, with a naked eye, on the monthly chart, those patterns are looking pretty significant. This is a bullish engulfing candle that is engulfing this one, and we are talking about the month of July. We engulfed June, make a significant upside pressure. So this is looking pretty good, and are now having two small red candles, blue. This is not looking bad at all. It looks like on the monthly chart we are forming that bull flag. Continuation to the upside could be expected from this one, but since this is a monthly chart, it could take a while. You see how the perspective is changing from the daily to the monthly as we are zooming out. That's why zooming out is a powerful stuff. I don't want to get you miscarried or be too excited, because this trend line is showing you one simple thing. This is still a downtrend, but it's cluttering the price around the downtrend. It's like we are trying to get that move momentum that will break the downside pressure. If this trend line will be broken to the upside, it will be a big move. That is what I'm seeing on the chart. It's still a downtrend. It's even clearer than on the weekly chart. Now that I think of it, that we are still in a downtrend, it could, by the fact, push us to the downside, but it's looking like we are participating in that energy, how would I say it, accumulation before the big move. That is what is happening right now. And maybe on the monthly we are forming that falling wedge, which you know that is a bullish inverse of battle. So the thing is, when you see this trend line broken to the upside, you will know that we are in a hard bull mode. The thing is, it could get thrown away here one more time. So do not think that you shouldn't be expecting those lower prices of around 32 cents that we made in June. It is still a hard possibility, but I'm saying this is not looking that bad. It's just a matter of patience. We're talking about the months. Every candle is 1 month, so it could take a while for a good bullish setup. You know what the volume is showing me? That the volume is falling down all the way from this point. And what does this mean? It means that it was a falling volume, but at the same time here we had a rising prices. Ladies and gentlemen, on this peak we had a divergence of volume and price, and this was a hard indication of a changing trend. Of course, it's always easy to talk about trend reversals when things already happened, but this is my biggest key takeaway from this volume. It's in a declining phase, but it started to decline all the way from here, from the May of 2021, not from the real peak of the end of 2021. On the end of this video I will show you why this is not looking that bad as it might seems, but for now respect the white line, 21 moving average. Here on the May of this year it became a big problem. We fell below it, and it was, well, practically years that we were below it. Now this guy that is standing at $1.13 is making a big resistance. You can see that we almost touched it here. I will count this as a touch. And the real bull market, for those of you that are asking that question, will become a reality when we cross above this 21 moving average. So $1.13 at this moment need to be crossed. Unfortunately, at this moment we are far away from that. But as this monthly chart show you, it's not all that bad. But now, the dessert of this video. Look at this, something very interesting I noticed. And for you bulls, pretty hopeful. Now, if we take Fibonacci retracement tool, we already used it on the daily chart, I believe. Take November of 2020 and this peak of 2021 as an impulsive move to the upside. What did we get? Well, something very, very important. The reason why we bounced right here at this level of 38.2%, 35 cents. Yes, we peaked it a little below, but that is not important. What is important is that if we can hold 35 level on a possible throwback to the downside, for example, in a scenario like this, it would be very bullish, because that would mean that Polygon on the big picture as we are looking here is still in a strong uptrend. We retraced only to the 38.2, which is a great retracement for a new continuation in a new bull market. Now there are scenarios in which we are retracing to the 50% at around 18 cents. That would be catastrophic from this point, I know, but it is a possibility. For now, if we are managing to hold 35 cents, we are still on a long-term uptrend. I really hope this video gave you some value in your investing or trading career. If you are just a holder of Polygon, practically, I did my best. And if you made until this far into the video, it is well appreciated. Well, I gotta go into this one. Lots of work ahead of me. Hope you will join me. I'll see you in that one.